Hi, everyone. Good morning and good afternoon, even depending on where you are in the world. Uh, Welcome to this afternoon's or this morning's webinar. Thank you to Africa Global Funds for facilitating this, and you are most welcome. Before we get started, just a couple of housekeeping points. And we are only going to run for an hour. We will not overrun. We may stop a bit short, but we're certainly not going to overrun, so you can manage all your diaries accordingly. Please do use the chat facility, which for me is on the bottom right-hand side of my screen. For you, I hope it's the same. And just input your questions there, and we'll try and get some questions as we go along. Obviously, if there's something urgent, I can try and spot it. But the idea is for this to be as interactive as possible. So please do get involved by asking some questions. Look, we're very, very lucky today to have some very experienced and knowledgeable investors and operators in the African agri space, as you can see from the assembled team here. So I think we should take advantage of that, obviously. And personally, I'm very excited because I have a great affinity for agriculture generally. I grew up on a farm. I've got family who've been farmed in Africa. So this topic has a real personal resonance for me. So I'm looking forward to hearing what our panelists have got to say. I'm a partner at Charles Russell Speechlys. We're an international law firm. I head up the Africa group at the firm, and we've been advising on agri investments in Africa and agri operations for many years. I think I did my first deal in East Africa in the mid-90s, actually. And both arable and stock-related investments, primary and secondary. So it's an interesting, it's a very, very topical subject for the continent and for our panelists as investors and operators. So without further ado, I'd just like to ask my panelists, or our panelists, to introduce themselves. Tamer, can I start with you for no other reason than you're at the top of my list? Just tell us a little bit about yourself, a little bit about your fund and what you're hoping to get out of today and various other things.
Sure, happy to do that. Glad to be among such a fine group of people. I'm Tamer Rakhi. I'm the managing director of the Acumen Resilient Agriculture Fund. We like to think of ourselves as an impact agri VC fund where we invest in startups at fairly early stage, where their business models help smaller farmers adapt to climate change. That's the thesis of our fund. We invest in East Africa, Nigeria, and Ghana. Where our team, we have two teams, one based in Nairobi and the other one is based in Lagos. After this panel, I would love to, during the panel, after the panel, I'd love to connect with different people in the ecosystem, exchange knowledge, and learn from everyone on the panel and outside the panel that we connect with as a result of the panel as well. Thank you.
Thanks, Tamer. Hannah, how about you and AgDevCo and what you're up to?
Thanks, Adrian. I also agree with Tamer. It's great to be here and amongst such a great panel. I'm Hannah. I've been with AgDevCo for 7 years. We're over 10 years old and have a portfolio of impact investments in across sub-Saharan Africa of $150 million in about 50 companies. And we're also spread between West and Southern Africa region, so investing in over 10 countries. I'm based in London, but I'm happiest when I'm out on the farm, looking at business problems together with our investees and potential investees. And I'm newly appointed as the director of our technical assistance facility, which is a successor to our smallholder development unit, so integrating smallholders into commercial value chains. So lots to share with Tamer in those objectives.
Yeah, no, that's interesting. We'll certainly come on to technical assistance later. That's great. Deji, how about you?
Yeah, thanks, Adrian. And hello, everyone. The name is Deji from Exa Capital. We're a private investment firm, and we've been investing in Nigeria for a number of years now in the food and agri-business sector. But more recently, we also just launched an impact fund that is looking to invest in social agriculture enterprises across a range of countries in sub-Saharan Africa, about 12 countries to be precise. And we'll be doing that coverage from West and Eastern Africa. So we are quite excited about this new fund because it's giving us an opportunity to begin to really address a couple of the gaps we've seen in the value chain across the region that will really help to catalyze economic activities within the region. So I'm happy to be here today. Thank you.
Thanks, Deji. Last but certainly not least, Avril, how about some background from you?
Thanks, Adrian. So I am founding partner of Exa Capital, which is a private equity firm operating in the Sub-Saharan Africa space. We, over the last 13 years, have invested in 27 transactions, which adds up to in excess of $200 million worth of transactions. So focus has been primarily on the food and agri value chain, and we're now starting to branch out to some of the other value chains, but primarily focused on food and agri across Sub-Saharan Africa. Geography-wise, mostly focusing on East and Southern Africa, but with a keen interest on West Africa. And it's a privilege today to share some of the experiences we've had over the last 13 years with the rest of the panel and the participants. Thank you.
Thanks, Avril. And just staying with you, I wonder, I don't think we can start a session like this without at least looking at what COVID has done, or what's happening because of COVID, or what isn't happening because of COVID. So I wonder if you could just give us your thoughts really on the state of the agri sector at the moment before COVID struck, and then we can sort of look at what happened because of COVID or since COVID.
Great. So if I had to summarize the state of the sector prior to COVID, I think it was on a pretty strong footing. We have seen quite a strong growth in local production across the food and agri value chain, a very strong investor interest from both strategic and financial investors to support the expansion of the food and agri sector. We also saw quite a lot of capital being attracted and looking for a place to participate in a growing sector. What held the sector back prior to the COVID is all around the structural deficiencies in supply chains as well as routes to market, and the difficulty of achieving economies of scale, because most of the operations in the sector are generally of a smaller level compared to global comparisons. On a positive front, we see an increasing adoption of technology, not perhaps at the pace that one would have hoped for, but certainly on a growing trajectory. So I think generally a pretty good picture. I think maybe a couple of other things that are potential threats to the industry. And maybe this talks to some of my colleagues on the panel. The lack of availability of debt capital to support food and agri is a challenge, particularly the cost of such debt capital. So what we find in practice, most of the investor interest or most of the growth capital has been funded by equity investors, and we need a healthy balance between equity and debt if we really want to make a big difference in the sector in Africa over the next decade or so.
Yeah, I think that's right. I mean, there's talk, isn't there, the agricultural sector in Africa will be worth $1 trillion by 2030, and for that, you need to have billions of dollars per year investment, and I think at the moment it's not there yet. I don't think. Certainly anecdotally, I don't know. I certainly don't see that. So, but I mean, in a very real sense, the continent relies on agriculture as a life and death sector. I mean, there's 250 million people in Africa who are, who suffer from hunger effects. So it's a very real issue that we need to grapple with. So, Tamer, just to ask you a couple of questions around the pre-COVID situation. I mean, presumably you share the thoughts of Avril, but do you have anything to add to what he said?
No, I definitely second what Avril just said. And as a matter of fact, on the working capital side, we see companies, especially at the early growth stage, suffering right now from this, lack of enough working capital. And you cannot just keep financing operations by equity. You have to have, reasonably priced debt as well. In one case, we did a quick study on the cost of capital in some projects in Africa compared to other parts of the market, and we realized that cost of capital sometimes is more than double the other markets. Which now, if you are talking about financing a company that's working with smaller farmers, that means the cost of that product or service delivered to the farmer will be significantly higher, just because of the working capital. I'm not even talking about supply chain yet. Working capital is significantly higher. And that's definitely affecting competitiveness.
No, I think that's right.
We have seen recently a survey done on farmers in Kenya and smaller farmers in Kenya, and 80% reported that they were worse off post-COVID than pre-COVID. However, there is always a silver lining. And in this one, we noticed also that many younger folks are moving, out of cities, going back to their villages, thinking that or seeing that jobs in the agri sector are more sustainable. It's a more sustainable source of income, because in cities you do like lockdowns, partial lockdowns, many things. Many of those jobs actually disappear. So
that's interesting. I mean, but that's borne out, isn't it, by some of the stats, of course? Because I mean, globally, 65% of the adult population earn a living from agriculture, and I think that translates into Africa quite well. I mean, it's higher in some countries. I mean, Zambia, I think it's 75% of the adult population relies on agriculture. So it's interesting. Deji, from your perspective, how bad has COVID been to the sector in Nigeria, particularly?
Yeah, I think it's been a range of experiences depending on the value chain that you're looking at. There were value chains that benefited significantly from the lockdown that happened. So, for example, the rice value chain during the lockdown, funny enough, around that period there was also some lockdown of the border. So we saw a spike in the production of paddy rice in the country, and is driving closer to bridging the supply-demand gap. But then, if you move to value chains that are very export focused, like the cocoa, shea butter, or some of these other ginger, cashew that are export focused, they suffered quite significantly during the period. So it's been a range of experiences depending on the value chain that you're looking at.
And the suffering they had in that sector, was that because of supply chain difficulties, or was it yields, or was it getting it from the field to the logistics chain, or how was that?
There are challenges that are existential. They've always been there, like issues of yield. This is a problem that we've always been facing. So this did not increase radically during this period. Rather, it's basically supply chain issues. One, from moving the products from farm to the port, but then there were lockdowns as well. So even countries that were importing from Nigeria, a lot of them were holding back on placing orders for import. So what we've seen now is that a lot more companies are beginning to look at localizing their their supply chains within the country, especially those that are import dependent as well.
Yeah, that's interesting, isn't it? And Hannah, from your perspective as an operator of the sorts, or at least directly involved in operating, what have you been doing during the pandemic that you might not otherwise have done before? And have you been doing things that you've had time to do now, or are there some unique characteristics of what you've been up to during the pandemic?
Yeah, good question. I think there's been a variety of different opportunity sets and threats during the pandemic. We do some operations and are close to operations by virtue of our investments, but depending on how the country and the politics has reacted, there's been a variety of scenarios to deal with. So where you've got the stringent lockdowns, that there's an effect there on the poorest people and the ability of them to get to market and bring goods and move goods around. So I think we've seen most businesses in Agri being exempt from lockdown restrictions where there have been restrictions in movement. However, that doesn't mean it hasn't complicated logistics and distribution a lot. And uncertainty over that has sometimes caused more issues than the actual result of disrupted logistics. And so not knowing whether if you send your fresh produce to port, say in Mombasa, it's going to be shipped in before it's ruined, that creates a lot of difficulties in terms of strategic planning and getting the most out of your harvest. I think, though, in some cases we've seen an incredible response to the health challenge, especially where places, one of our investments in Sierra Leone, which was hit a few years earlier by Ebola, were very ready and capable to put in practices in the business that would help with hygiene and stopping the spread of COVID. But also, many of these rural commercial organizations become hubs in towns where there isn't healthcare or provision of education on these issues, and play a very important role in the whole country's recovery.
Yeah, that's really interesting. Just to step back a second from COVID, just thematically, Tamer, I wanted just to look at why agriculture at all, just from a thematic perspective. I mean, there's obviously some, it's a hand-to-mouth thing in a sense, but in a life and death thing. But can you just talk about some of the issues about why invest in agriculture full stop? You're on mute, Tamer. I think that must be the most common. That must be the most common phrase for the last 18 months, except without your name.
Absolutely. And for us, it has two elements. Okay, first, the impact side, and the second one is the economic side, of course. Reflecting the demands we have from our investors and what we as an organization believe in as well. So on the impact side, I think we all know the story, right? We have hundreds of millions of people affected by the sector. The sector is literally feeding, the continent. The potential is enormous, not only to eliminate imports, but to export to the rest of the world. The opportunity is there to help, more than 30% of the population go, that are below the poverty line, help them, prosper, etc. But at the same time, economically as well, there is definitely an opportunity, because you look at the sector and the inefficiencies are enormous. We cannot just overstate the inefficiencies. The same way we cannot underestimate the challenges, which we are all familiar with. So it's we cannot by any means try to draw a rosy picture. However, what we have decided is that, okay, let's focus on a specific set of countries. Let's focus on specific thesis, and let's try to help startups that have meaningful business models, that where those business models are scalable and exitable. And I'm focusing on the scalability and exitability because we've all seen companies hitting like a sort of a ceiling when it comes to the revenues and size, and then we can't go beyond that, or their management doesn't have either the will nor the capabilities to grow beyond that. But when you look at the scene, and this is before I ran that fund, I came from the PE side of the business, and before that I worked for Cargill for years. And one of the major challenges for the larger ticket funds and for the Cargills of the world is having investable companies that are sizable enough, that are not owned by families that are building those businesses to remain within the family. And we are seeing that. We are seeing entrepreneurs building businesses from the bottom up, still at an early stage. But I think it's the time for for many others to bet on that sector and bet on those entrepreneurs that are entering that sector with that kind of mentality.
No, I think that's all valid points. Hannah, did you want to say anything about perhaps AgDevCo's, I wouldn't say necessarily unique approach, but it's certainly very directive, isn't it, in terms of focusing on poverty alleviation and empowerment and smallholders, etc. Just on a thematic level, I just think it's important to set the scene about why various investors invest and what they're thinking about when they're investing.
Yeah, so like Araf, we're an Agri specialist fund, and we note that there's two key ways that we can contribute to the alleviation of poverty, and one is, and probably the driving one, is about economic stimulation. We're talking about commercial development of businesses that contribute to an active and vibrant agriculture sector. That has so many impacts coming off it that you can't measure in employee numbers and in impact metrics that can transform rural communities and improve the security of food. We can also link that to smallholder development. As others have mentioned, economies of scale are about how productive people can be. And when you've got individuals working and not being productive in their small holdings, and there's opportunities to bring them together into commercial businesses where you can be 5, 6, 20 times more productive, that's going to be a win-win for both individuals in an economy and the whole economy. So as AgDevCo, we look to invest with flexible structures and contribute technical assistance to help build the sustainable commercial businesses that are going to act as that hub for both individual and economic development in the area.
Yeah, no, that's interesting. And Avril and Deji, what about these two concepts, food security and water security? Just on a thematic level, Avril, do you want to pick one of those, or Deji, and then the other one do the other one, or do both? I don't mind.
I can maybe address the food security. So I think as a private equity investor specializing in food and agri, the investment rationale for us was always a triple approach of economic returns, sustainability, and impact. So in the area of food security touches all three of those elements, and I think if one had to describe what is the outcome we want to achieve in one phrase, it would be to completely substitute imports by local production. Given Africa's very high dependence on imported processed food and agricultural products, some countries as high as 80-90%, and some countries maybe around 50%, but that number is just too high to create stability in the trade flows of most of the sub-Saharan economies.
Interesting, thank you. Deji? And actually, just to deal with a supplementary question that's come on, when you deal with water or food security, just give us an idea if the pandemic has impacted on how to exit or the capacity to exit from deals. Because I know you may have been looking at some of those things over the last 12 to 18 months as well.
Yes. First of all, touching on the water security. So one of the things we've seen over time is it's I think prevalent to almost everyone in the art space, is that there is a strong focus on productivity, which I think is very important. But what we're beginning to see is that that gap between productivity and utilization. And this is really where we see the problem that smallholder farmers are facing, in the sense that they can only, for example, grow crops once a year. Paddy producers can grow within 4 months, and the land is left fallow for the rest of the year. And the question we're asking, or we've been trying to also deal with, is how can we increase utilization of the land assets and then increase productivity, so that on two fronts, we are actually increasing the output from the farm, and we're helping to improve the quality of lives, of the smallholder farmers, ultimately the outputs. And talking about exits, so yes, you're right. We'll be looking at some exits, and I mean, we are happy that one of our companies we just exited one of our investments. And one of the things we observed during the period is that a lot of investors are a little bit more cautious, and they are, just lying low to observe the outcome, of COVID. I think many are trying to game the price as well, believing that prices are going to drop, during this period. And I think that has helped. What that has translated to is that a lot of entrepreneurs are holding out, trying to build their business while they wait for the right price in the market. So what we were able to do is to sell back to the promoter, to the founder of the company, the shares, and it was a very good handshake between us and the promoter of the company. But yes, exit is fine in between, depending on what sector you have as well today.
Thank you. Can I just address one final thing before we move on, which is sort of a lot of people looking from the outside see a difference between primary agriculture and secondary agriculture. And I wonder if, Hannah, you might just give us sort of 30,000-foot view of the difference and which one you find more impactful or interesting. And then perhaps, Tamer, you could give an idea about how you go about investing based on those two types, or at least that categorization. I mean, there is a tertiary agricultural sector we can talk about, but there's essentially primary and secondary.
Thanks, Adrian. Yeah, I think we have over 50% of our portfolio is in primary production. And I think that's the basis for all food supply. So there's a need to continue to invest in primary production. However, it is one of the most risky areas and where smaller margins are made. And there's a challenge on the continent to ensure that there's enough value add and secondary production in order to stimulate those higher margins and actually put value back into Africa. That is more difficult than it sounds. It means there's more challenges and hurdles to overcome to achieve that. As you may be a first mover in putting in a cracking plant from academia, or beginning to aggregate and process foods in areas where there just hasn't been anything before. So you don't have that competitive drive, you don't have the supply of equipment and machinery, and sometimes the infrastructure doesn't allow for the logistics of those different sorts of export or distribution in the country. So there's a need to continue to put capital in at primary level, but there's a need to develop the value add elements also to ensure that overall you're creating the most value possible in the areas where investment is.
I think I agree with that as well. Tamer, presumably that rings true with you. And for ARAF, is there obviously it's an impact, but I mean, impact can come all the way along the chain, I guess, not just in primary and secondary.
No, absolutely. And at ARAF, do we invest in a company that just does primary agri, like farming? Absolutely not, because our focus we are very small or farmer centric. But would we invest in a company that, for instance, has a nucleus farm to grow tomatoes, but at the same time, working with the outgrowers to develop a very strong outgrower scheme where they provide the smaller farmers with access to proper seeds, proper inputs, proper and agronomy support, and at the same time act as the access to market for those farmers, and then maybe that company process the tomatoes into tomato paste. So that kind of setup, absolutely, we invest in, and as a matter of fact, we did invest in a model like that. So do we invest in a company that just provides farmers with seeds so that they can, grow more maize? We prefer not to, because we are looking for companies that, where the sustainability of the smaller farmers is a key element to the sustainability of the business model itself. So we're looking for platforms. So if it's a hybrid seed company, we're looking for that. If it's only hybrid seeds, not really. But if it's a company that provides the hybrid seeds, provide the agronomy support, at the same time connects those farmers to market, and along the way help those farmers move throughout the value chain from just maize farmers to maybe maize plus higher value crop, then yes, we look into companies like that. So it's all about platforms than a single product company.
No, that's interesting. Thank you. And Avril, for you, in terms of some of the challenges for agri investing around, there's all sorts of areas where help is being brought to the operators or to the farming opportunities, and things around finance, around insurance, around the technical assistance. But can we just talk about finance first? What are the challenges for finance? I mean, we talked a little bit about it being heavily equity based so far, and there needs to be maybe a different approach. What are you seeing in the work that you've been doing around finance, particularly?
So, thanks, Adrian. If I understand your question, is finance to small scale growers primarily? Is that the
well? It's about finance generally. Actually, I mean, I don't think we necessarily need to worry so much about large scale, but because I think the challenge is certainly from the panelists is around empowering and focusing on impact and smallholders. Now, you can make an impact on a large scale, of course, but the focus for impact generally is at the sort of low, granular level. So finance is going to be an issue, and I just wanted to know what your experience was with the finance for that type of investment.
I think probably the biggest challenge in the availability or lack of availability is to support the growth and development of the small scale farmers, simply because of small amounts. You know, if you look at a farmer working on a hectare or 3 or 4 hectares, we're not talking about a big enough ticket to get most of the traditional funders excited. So the only way it could work is through some kind of aggregation model. So what we've seen is that, and there have been many different approaches to, let's call players in the middle part of the value chain that is dependent on procuring from small-scale growers to put together sophisticated outgrower models, which includes an element of pre-production funding and a corresponding offtake arrangement. That has been one model that has worked quite well, not across all of the value chains, but certainly in the larger commodity product value chains, it's worked very well, particularly areas like maize and such like. However, that is not really enough to spread across all of the verticals, and the lack of size of ticket is a major problem. Unless what we've also seen is the formation of cooperatives. Now, cooperatives it's an age-old concept across the world, and has been frowned upon because the notion was it's not a commercial approach. If you're a cooperative, it's delivering a service. But in many cases, the only way for these small-scale growers to access service and finance is through some kind of cooperative structure. So we believe that that will have to remain a very key solution going forward, is to support the formation and development and of cooperatives to try and aggregate growers.
Thank you. And Deji, could you contribute something around access to finance as well? And Tamer will come on to talk about some blended finance in a second, but just around finance, maybe particularly in Nigeria, which is obviously the biggest economy on the continent. Are there any sort of thoughts or themes emerging around finance for agri?
Yes. So what we are beginning to see is that going into specific segments, for you to invest in certain segments, the investors are constrained by size and scalability, right? And so that begins to form a theme, because you want to make sure that whatever you're investing, you're providing finance that can scale. And one of the things or themes that I imagine, especially as African borders begin to open up, is the ability to create platforms. So you're looking at different opportunities, and you're asking yourself, how can you bring these different, within a segment or even across segments, how can you bring all these across and bring them together into one piece as a platform, invest at that platform level, and then, support to scale. What that does is it gives you the right size and it gives you the opportunity to find good exits, for the kind of capital that you deploy. Now, on the flip side, when you also think about smallholder farmers, I think everyone here has said very well. The real focus is how do we enable these small scale farmers or smallholder farmers to drive, increase in productivity and, increase their supply side. But unfortunately, providing capital directly to smallholder farmers is quite challenging. You need a very different type of infrastructure or a very different type of model to be able to get capital across to them. So what people are trying to see how to do also is that intermediary between, the smallholder farmers as well as, the financiers, and seeing how we can enable those intermediaries. And that's actually one of the models that our new fund will be building on how to enable intermediaries that are actually engaging directly or indirectly with these smallholder farmers, either in terms of helping them improve their productivity or providing market access to them or providing financing to them in one way or the other.
I think that's interesting. And Tamer, I think that kind of leads us on to the sort of, I don't know if it's a magic phrase, but certainly blended finance as a concept is important at the smallholder level. And I think it'd be worth just looking at that for a second, just unpacking it and see so everyone understands what it is and how important it is and why.
So the way we look at it is we look at it at two levels, like at the equity level and at the debt level. Okay, at the equity level, and this is something that we did with our fund, is we started by leveraging a little bit of philanthropic money to go out and get a first loss layer. And with that first loss layer, we were able to go out and raise commercial capital. Okay, because we are de-risking the commercial capital. Catalyzing space that people are usually not very enthusiastic about, which is investing in agri startups in Africa, okay, and climate adaptation. So, which is a whole different story. But now, with all of the above, we were able to go and also raise money for a sizable TA. So far, we raised $5 million for our TA, which is extremely important for those startups, because you can now support them with activities that otherwise they don't have the cash for. But that's on the equity side. On the debt side, we earlier talked about how, as Avril mentioned, how expensive the working capital is for companies in Africa, especially at an early stage. Now we are seeing foundations coming to the region saying, okay, you know what, we will provide capital to de-risk your operations so that your cost of capital is lower. So this way, the cost of the product or service that is delivered to the farmer is less. So we see more of this. It's still at a very early stage. We need way more, but I think it's a very good starting point. Now it's our turn. I believe you are mute.
There you go again, right back at me. Can you hear me now? So Hannah, what about you in terms of the AgDevCo work and blended finance as a concept?
We are all for blended finance, and as Tim has explained quite eloquently, that's a good example at the fund level. There's also the ability to blend it at project by project level. So one good example of this is a sugarcane estate in Malawi, which we were asked to do some work to rehabilitate. And this was a sugarcane estate that was beyond help. It's been mismanaged. The yields were down. It wasn't sustainable. There was no chance of attracting to commercial investment there. So what we did is we blended grant from the FCDO in Malawi with a commercial investment. And that grant just took it to a level where we could repair the damage and get the business back on track. And then the commercial investment was able then to take the business to the next level, like ensure that it became a commercial, sustainable agri-business. So it's very powerful, both on a fund level for allowing investors to go where they wouldn't normally be able to go, but also on a project level for case by case, being able to take on businesses that otherwise wouldn't be able to access finance. So we also take the approach of using technical assistance as a way of blending as well.
Yeah, well, that's a good segue really to talk about technical assistance, because actually there's a question in the chat about what the stakeholders are doing to make the vulnerable have capacity to deal with shocks or protections to their incomes, and that's part of the technical assistance sort of discussion. So, I mean, Hannah, can you just give us sort of bird's eye view of what you think technical assistance is, and then we can get Avril and Deji and Tamer to give their views of how it operates in practice as well.
Thanks. Yeah, I think as a set follow on from what we've just been saying, I think we appreciate that businesses need more than just capital. It's not just about finance. There's elements of core capacity building where the capacities within the businesses, the resources that are available to them are not of a quality that a commercial business requires. There's a need to overcome additional hurdles to in these contexts. So either a rural context or particular geographies or challenges in the market that may be infrastructural or also to do with legislation and bureaucracy that are tough and expensive to overcome. And so there's also so that's sort of about market shaping and policy change, which is a new kind of concept within TA where many bigger DFIs are focusing some of their resources. But then the key to accessing that increased impact is around including inclusive business practices. So that's getting into your value chains, helping from the ground up those smallholders that Deji was referring to earlier. How do you increase their productivity? How do you teach them sustainable methods and ensure that their farms are going to last and their productivity is going to improve? And that's where we focus much of our TA, and the 5-year program with the MasterCard Foundation we've just finished has provided training, inputs, design of smallholder schemes that help them to integrate into commercial agriculture hubs, and we've helped over 500,000 smallholders access these trainings and inputs as a result. So for me, it's a key area for adding on to what you can achieve by developing a commercial farming business. Is like bring everyone with you. Why not just like bring the communities, the surrounding farms, the people that in rural areas that most need it, they can access benefits from the economic development as well.
No, absolutely, I agree with that. And Avril, have you had some good experiences with deploying sort of technical assistance as part of your investments?
Yeah. So again, we have in all of our funds to date had an allocation from, in this case, it was funded from our limited partners that participated in the respective funds to, on an orchestrated and collaborative basis, put together technical assistance to our portfolio companies in those funds. Most of that technical assistance, I think, as Hannah has alluded to, has been focused on capacity building around establishing new industries, new disciplines in most of the territories where we operate. I will use an example for one of our investments was a timber business in Rwanda where that industry did not exist prior to us entering Rwanda. There was no timber processing industry, so we had to basically develop the skills base from scratch, how to harvest the tree, how to do it in a safe way. So it is primarily focused on capacity building, and then secondly, because of the entities in which we invest in are mid-sized companies in a very early stage of their growth cycle, so quite a lot of building blocks that needs to be put in place to drive the long-term business building phase in which business find themselves. So, and that capacity building and driving those building blocks, most of those portfolio companies, management teams don't have the bandwidth to spend much time. They're so busy keeping the business running day to day that those things are left behind in terms of priority and have to be driven from another source.
Yeah, no, that's interesting, and then that kind of addresses one of the questions in the chat room from Patricia, who's asked, there's been historically a lot of support provided by NGOs, donors, and governments, particularly to smallholder farming. So what has been the impact of these players in building sustainable commercial businesses? Now, I know you're not an NGO nor a donor or a government, Avril, although you may have aspirations. But certainly it sounds like you've been building sustainable businesses across the portfolio. I think that's a fair summary, isn't it?
Absolutely. I think if it hadn't been for the activities of the NGOs and the development finance institutions of Europe, the landscape would have looked very different in terms of supporting the development of the food and agri value chain. And we've seen the enormous impact it's had around the communities in which our companies operate, mostly remote, outside of cities, far away from civilization, how it has transformed towns and rural areas through the help of these technical assistance programs.
Yeah, it's interesting. I just want to move on to a bit. I think there's two things I really want to talk about in the next. One is about impact and how we measure it, and the next is climate change. And if we can deal with both of those in the time we have left, I think we'll have achieved something. So just certainly on impact, I mean, most of the operators and investors represented here have said explicitly that impact is something they're looking to achieve. Tamer, could you just give us a view from ARAF really around what is impact for you and how do you measure it? Because I think it's not just financial metrics. There's a whole bunch of other stuff that goes into working out the impact of something that you're doing. And I think it'd be really interesting for everyone to hear how you approach it.
Let you know that as a team, we take impact very seriously, right? As a matter of fact, we committed to our investors that, yes, we have a financial hurdle rate, but also we have an impact hurdle rate.
Okay.
So when it comes to impact, of course, we start with, the high, the 30,000 feet is how many lives are we impacting by investing in those portfolio companies, number one. Number two, we always talk about impact, but sometimes we forget that what matters is the impact on those farmers. So what we do is that actually we use surveys done by third party to listen to those farmers to actually quantify that impact, and to quantify that impact from 2 points of view. First, the impact on their livelihoods. How did working with company X affect their income volatility, yield? Are they better off, worse off, et cetera, et cetera? So many things. Our scorecard, more than happy to share it offline with whoever is interested. So farmers' well-being. The second one is climate resilience, because, well, we are a climate adaptation fund. So we might as well measure the impact on the farmers' climate resilience. And in climate resilience, which is fairly early in the game, there is no gold standard yet globally, so we're all learning. And we're a young fund. We only started deploying money last year. So we developed also our climate resilience scorecard. We look at their access to enablers, their ability to absorb a climate shock, and their ability to adapt. Because, well, we all hope that we can slow down and ultimately stop climate change. Well, climate change is a fact of life. So we are measuring how we are affecting the ability of those farmers to adapt to climate change.
Agreed. And we'll come on to climate change in a second. Just on impact, though, Hannah, I'm sure some of what, or a lot of what Tamer was saying around impact resonates with you. Is there something particular about how you measure impact, or what you're looking at in measuring impact, so that you can report how your investments have made that impact?
Yeah, I think there's a difference between what the standard metrics are that our funders often look for, and I think are quite common across the set, so the depth and breadth of impact. But we try also to try and capture the intangible, the more sort of transformational change that is coming across with as a result of our commercial businesses being set up in rural areas. I mean, that is a really challenging thing to measure and understand. Like, it can be things like how many different businesses are being set up around that hub, how many more tin roofs are there in the area, in the local village, and as well as what access to education and healthcare has improved as a result of this. So, for example, where we've been project manager for a farm hub in northern Ghana. we've had to look at all these aspects, like what is the impact we're having on the local village, and the prospects for people there in terms of employment, as well as kind of income uplift and a change in culture as well. So we do that with deeper dive case studies that use similar methods to those Tamer has mentioned, surveying and being on the ground. But it is much harder to capture some of the other these sort of impacts in numbers of people that have.
Yeah, sure. No, sure. And Deji, from your experience, have you got a sort of a modus operandi when it comes to measuring impact at Sahel?
So the way we think about it from the point of
I'm having trouble hearing you. Deji, do you want to put your video off and then see if it works just with the audio?
Area of change. So for one of can you hear me?
Yes, I can hear you now. That's better. Thank you.
Okay. Yes. So I was saying that the objective of the fund in the first place was is to address poverty alleviation, and the way we think about it from an impact point of view is one.
No, I feel like a presenter on a radio program saying, "No, I'm not hearing you. I'm going to have to move on." I think maybe. I think,
and we track that.
Okay, Deji, I'm just going to pause there for you, and let's go to Avril, perhaps to answer or at least give some input around the measurement of impact.
Sorry, Adrian, I've got a bit of a throat attack. Just give me a minute or two.
No, that's fine. That's fine. I mean, I know there's lots of different things you can measure with impact, and it kind of depends on what your investors want. But as a general theme, you want to. One of the reasons for investing in Africa it's just the easiest in agriculture. It's the easiest way to alleviate poverty quickly, and empower people with social mobility tools so that they can generate money for their family, education, and other things. And so, impact is a word that covers a whole range of aspects. And I just wonder, Avril, whether there's a particular set of these metrics that you might focus on, distinct from the others.
So, Adrian, I think generally we know the world of ESG has kind of shifted towards positive impacts, has become much more pronounced. For us, and it's an evolving topic, for us in the case of our firm and our portfolio companies, most of the focus is on livelihoods and creating sustainable communities that support and operate around our target companies and the value chains in which they operate. So I would almost use that as the descriptor.
Okay, well that's helpful. I think we've got only a few minutes left. I just want to move to climate change because it feels a bit weird just only giving it 6 minutes, but I'm afraid we just run out of time because it's obviously the elephant in the room, so to speak. Tamer, do you want to give us just are we past the point of no return in a lot of areas in Africa as far as agriculture goes, and what just kind of sketch the problem?
It is just, we need to realize that, as I mentioned earlier, climate change is a fact of life, and we just need to think more about how we can help those who are affected the most to adapt. In 2019, only 5% of $600 billion globally invested in climate went to adaptation. So we need more awareness and we need to do more. And it's never too late. Yes, there are changes in weather pattern, but it's been overdue to help those farmers adapt and actually start to use irrigation, how to manage their water resources, how to use if it's an area that's susceptible to drought, how to use climate smart inputs, etc., etc. So definitely there is a lot to be done, and it's never too late.
And Hannah, what about? I'm pretty sure you've got some views on this too.
Yes, I agree with what Tamer's saying. It's not too late, and I think Africa and agriculture in Africa is part of the solution. I think we have several areas which are really key now to address. So soil degradation is one. We're looking at a 60-year time frame for some of the best quality soils in the world to be gone, and there is an impetus now and a need to think very, very carefully and on a very large scale about using conservation agriculture practices and regenerative agriculture practices that build back those soils that are going to be essential.
Can you just repeat the period of time? You said how many years have we got left?
According to the UN, the FAO, they say 60 years of productive topsoils. I mean, there's a lot of evidence suggesting that this is degrading at a very rapid rate. And when you think about what the pressures are on land use, not just on agriculture and food production, but on the rainforests and the untouched land that is necessary to ensure we're doing enough for carbon sequestration and ensuring we've got lungs for the planet, this is very urgent indeed. So soil degradation is one area we're looking at helping as a blanket policy across our investments, but targeting specifically also where there's opportunities to create additional value and nutrients.
Okay, thank you. Deji, is there anything around technology in terms of climate change that you wanted to mention?
Yes, and I think it's really built around the seed system. So one of the things has been happening quite, especially in Nigeria, there's been a lot of flooding events that we've been seeing more than usual, more than typical. And what we are also seeing is a lot of people want to go to the farm much earlier than they have always been doing, because there is a certain period where there's peak flooding and you don't want to be on the farm, at that period. To do that, there are two ways. It's either you are having seeds that can help prevent lodging, depending on the crops that you're growing, or you have very strong irrigation systems that helps you to plant, starting during the dry seasons. So these are two things that are coming into play. And when you think about irrigation, it's either you have all the money to spend building all the flood canals and very expensive drip and sprinkler systems, or you are actually investing in climate smart irrigation system like solar powered pumps and the likes. So we are beginning to see a lot of these innovations come to the market, where people are beginning to think of how do we make irrigation available, how do we have seeds that are improved that can withstand flooding, and this changes here.
Yeah, I think that's great, and I think we're about at time. But as you can tell, there's an awful lot to talk about, and you can't cover anything like everything in the hour that we've had available to us. But I think we've covered some interesting and very relevant and important topics. So I'd like to thank the panelists for contributing and giving their time and expertise to everyone. There's one or two questions we didn't get to. Question from Hilton Wade about containers and the cost of shipping, but I'm sure we can deal with that offline. But just remains for me to say thank you very much to the panelists, and thank you to the audience, and I hope you've enjoyed it as much as we have.